There has been a lot of discussion recently among investors, economists, and analysts about the increased likelihood of a recession in 2022. Some believe we already are in a recession, as we go into a cycle of tightening monetary policy launched by central banks around the world. The upcoming global slowdown will be substantially more painful. According to Gino D'Alessio, a recession is bad news for stock and bond markets. Stocks will suffer a sell-off as investors will lose faith in the capability of companies to continue to produce profits. In addition, as loan rates rise, most businesses will see their profit margins decrease. Despite the negative talks about the recession, Kevin Oleary believes that the market crash could benefit crypto businesses in the long term. Hey guys, and welcome back to this channel. This is Chad Confirmed, bringing you the hottest news in the crypto world. When asked about Oleary's investing in crypto, he elaborated on saying that he's doing some dollar cost averaging, which is a common effective technique in the market where you divide your investments into small portions in an interval of time. Kevin also said that in light of this, it is clear that we need legislation and policy on cryptocurrency. The reason for this is that you could have had a bid if we had institutional capital entering the market and allocating basis points to any coin. Instead, we're extremely volatile due to the fact that we're under-owned by institutions. He said that there is nothing new about this, and everything will soon bounce back to normal. However, this is inherent in the unregulated structure of the cryptocurrency. It's been a rough few days for cryptocurrencies. More than half of the employees at one of the top cryptocurrency exchanges in the world will be laid go. A prominent crypto lender, claiming extreme market conditions, has suspended all withdrawals and transactions for its customers. After a 3-month price slide from a high of $40,000 to about $20,000 due to rising inflation and recession fears, Bitcoin has become increasingly unfavorable. A few of the world's most prominent investors believe that we are in for a long period of low pricing, after Bitcoin Network's limited statements that millions of consumers would be held in uncertainty. The crypto industry experts are ready for the next to drop. It's no secret that cryptocurrencies are known for their price volatility and brief history. They've been through several rounds of brutal fluctuations. Beginning in the early 2018, the previous decline lasted around 2.5 years. During the COVID-19 pandemic, investors fled the digital asset market, inhibiting the excitement for crypto that had previously sparked global interest. The recent collapse has left several crypto heavyweights scrambling. A Canadian businessman and investor, Kevin Oleary, responded to the current crypto meltdown with his own words of wisdom. When it comes to investing, Kevin says that everyone has difficulty dealing with volatility, but there's always an upside to things. New and emerging technologies and marketplaces are constantly volatile, and the crypto market is just a new one. He thinks that it will be the 12th S&P sector in 12 years. Do you think Kevin Oleary is right when it comes to blockchain initiatives and how we should view volatility as a good thing? I would like to know your thoughts in the comment section below. And if you know someone that might be interested in this video, then share this link for them to watch. When asked about the uninvestability of crypto, Oleary said that there was no such thing. As a matter of fact, according to him, there are two types of crypto businesses: those who employ leverage and those who do not. Because of the volatility in your asset and the ability to leverage it in an effort to increase your returns, you now face a significant downside risk when there is a severe downturn in the market. It's easy to get carried away in a hurry. However, allow me to describe the process by which markets create bottoms. Going to zero always necessitates a major participant. That's a lifesaver. The long-term capital or one of these crypto infrastructure businesses that drops to zero is always a good bottom, and that's usually the first step in the process of reconstructing a home. That means someone is on the verge of zero if you have to sacrifice someone who used too much leverage, and it's always leveraged. In fact, if we do receive it, I think it'll be a positive thing. It will serve as a valuable lesson for the rest of us. In crypto, I believe we're overdue for one. When asked about how he invests, Kevin stated that he never utilized leverage. He elaborates that because I've experienced volatility like this in the past. I may utilize leverage on other assets, but it won't be in crypto. On an 11-month time frame, you can't afford to place leverage on volatility of 50%. People, on the other hand, are intelligent. This generation of crypto investors has not seen corrections of this magnitude, especially not with leverage. Everyone I know who has weathered the storms of volatility has learned a valuable lesson about leverage. When investors hear the words bear market, they can't help but feel a wave of fear. A lack of trust in the financial markets should be enough to deter even the most seasoned trader from joining the market. The bear market, on the other hand, may be ideal for new investors, according to some analysts. I would advise everyone to avoid picking the bottom. It's a non-starter. Nobody can predict when anything like this would happen. Diversification is necessary, though if you intend to remain inside a category. As of right now, I'm working on a slew of various projects. If a project doesn't make money, there will be much haggling about whether or not it can be written off as a loss on your tax return. Even positions like Bitcoin or Ethereum are decentralized, which is wonderful news for the crypto economy. In this case, it's not just American investors who are at risk. There is a lot of Bitcoin on the globe, even after rectification. It's just $880 billion, just nothing to whales, and therefore it's not a big deal. Cryptocurrency, even if it totals less than $2 trillion, is still a pittance in the banking sector. Because of this, the industry has a lot of potential when we get policy, institutional investors, and sovereign wealth engaged. In the long run, however, it makes a little difference whether Bitcoin drops another 20% because it is widely used. If you think there will be a policy on Bitcoin in 3 years, here is your chance to decide whether you want to wait for institutions to start purchasing it, or if you want to take a risk and purchase it now when the price is still volatile. It's a good time to invest in Bitcoin if you're a believer. There is no certainty that you will catch the bottom though. Everybody misses the mark, but having a little faith won't hurt. Looking at the bigger picture, the market crash would definitely favor crypto businesses in the long term. That's all for today. If you learned something new, like this video and make sure you hit the notification bell so you won't miss any of our uploads. Let me know in the comments below what your thoughts are on this video. Kindly subscribe if you haven't already. This is Chad Confirmed, signing off.